I'm your host, Kevin Bemmel, and we are here every Wednesday afternoon, 12:30 p.m. Pacific time, 3:30 p.m. Eastern time, and an hour in for Central and Mountain time. And we are here to talk about the way, how to improve our professional lives. So, you may say people making money, that's kind of crass, but in the end, that's a lot of what our professional lives are about. Hopefully we're doing well. Hopefully we're doing something we enjoy or more than enjoy. Hopefully we're doing something good for, society, etc. But we each have to come up with our own definition of success. So last week, I talked about sources of capital for getting your business started, whether it's a one person small business, a plumbing business or something like that, or whether you have your eyes set on trying to become the next unicorn. The financing streams don't really change, although the ones available to you will accord with the scale of what it is that you are looking to accomplish with your business. So today I want to talk about the types of entities most commonly used for starting a business. Now, in this case, I'm going to be talking about for-profit businesses. Some of these would apply to nonprofit businesses, but in general, that's a separate category. There's a different process for getting started as a nonprofit, and I'm not going to deal with that today. Perhaps I'll deal with that in a future show. If you're interested in that, drop a note into the comment section, and I will put something together on that. I have formed nonprofits in the past, including having done the IRS filings and all that other stuff myself. So I'm happy to sort of pass that knowledge along. Now, before we go into the actual material, I have to give the standard disclaimer. I am not a lawyer. I am not an accountant. I am not rendering legal advice nor accounting advice. I'm going to give you some basic information on the types of entities that are out there, when they might be appropriate, and the basics of how they work. And this is just to give you an idea, so you have some basic knowledge. And then you can talk to your accountant or talk to your lawyer or talk to whoever it is who's advising you in a more intelligent fashion, and decide what it is you want to do for your own business. So let me go ahead and share my screen. And here we go. And okay, here we go. So let's see, and move this over here, and slideshow. Here we go, and play from start. So it's hopefully, there we go, business entities. So here we are. An entity is essentially the organization that you use to conduct your business. And I'm going to talk about 6 of the most common. To the best of my knowledge, they're available in all 50 states as well as U.S. territories. However, the rules around them will differ from state to state. Okay, all of these entities are formed within a specific state. Okay, there's no such thing as a quote unquote national entity. Entities can do business nationwide, but you don't form, a corporation, for example, under federal law. They're formed under state law. Okay, unless we're talking about something that's formed outside the United States, which, again, I'm not getting into foreign business entities at all. We're talking about entities for use here in the United States. Okay, so I always like to show this just to remind folks of the 3 pillars of attainment. This is my overall plan for figuring out what do we want in life, what does success mean to us, and then executing on that mission. So it helps us to form our identity, And as you see, relationships and pursuits form the foundation on which we build ourselves, our self-image, etc. So we're dealing today, of course, in the finances realm, but like always, the other realms play into this. So when we become a business owner, that impacts our identity. It puts demands on our mindset as well as our health. And in building our professional life, relationships are key. They impact our families, certainly, and our friends, or we might say friends and colleagues, our clients, our customers. Those are all relationship-oriented functions, and so that's why overall this is a sort of a unified image. Okay, so just with always keeping that in the back of our minds as we go forward. So let's start with the fastest and easiest entity to form, and that is the sole proprietorship. Okay, now the reason it's the fastest and easiest to create is you are a sole proprietorship. In other words, if you decide to go into business yourself, we'll take my name, Bemmel, and let's say I want to start a plumbing company, Bemmel Plumbing. Okay, I can do that, and it's essentially just me. There's no separate entity. What I would do is file something called a fictitious business name statement, also known as a DBA, doing business as. And what I would be is Kevin Bemmel doing business as Bemmel Plumbing. Okay, not Bemmel Plumbing Inc. That's something completely different, or Bemmel Plumbing LLC, completely different. Okay, I am the business entity. Okay, now, tomorrow or today, later today, you could form a sole proprietorship. And you can file these days, you can file a fictitious business statement online. Just do a search, fictitious business name filing, and you fill out a form. The form gets submitted to typically the county recorder. Again, that can vary from state to state. And then once the fictitious business name has been registered, there's no such thing as approved, really. It's just registered, so people know, oh, this, Bemmel Plumbing is actually Kevin Bemmel. It's so they can find out who's actually running the business or who actually is the business. Okay, and then it gets published in a newspaper of general circulation. That's done in order to make sure people know you're operating under that business name, and essentially you're done. Now, in most municipalities, they're going to require that you get some kind of business license, and you'll file the business license under typically varies, I'm sure, from jurisdiction to jurisdiction, but you're going to file it under your legal business name, which in the case of a sole proprietorship is your name doing business as, in this case, Kevin Bemmel doing business as Bemmel Plumbing. Okay, that would be the legal name of my business. All right, now a couple of aspects of a sole proprietorship. First of all, you have no inherent liability protection from the entity itself because you are the entity. So whatever assets you have could potentially be subject to paying off a lawsuit if you were to lose. Okay, if you don't pay your taxes, the IRS can come after your personal assets. So there's no liability protection at all in terms of the entity itself. Now, of course, you can purchase insurance, and that insurance can help protect your assets. And can, if it's professional liability insurance, or E&O insurance, is errors and omissions insurance. So that can provide you funds to hire a lawyer to defend yourself if you get sued, which is a good thing to have. In fact, it's in some businesses, real estate appraisal, financial services, it's crucial to have E&O insurance or professional liability insurance. Okay, but in that case, it's the insurance that's helping protect your assets. The entity itself has no gives you no liability protection, okay, because it's still just you. It's not separate from you. Okay. And then in terms of filing your tax return, your income tax return, so you'll file what's called a Schedule C on your regular tax return. Okay. So if you're used to filing the one of the short form returns, like, you know, I forget what it's called, but anyway, you won't be able to do that if you have a sole proprietorship, because you're going to have to file a Schedule C. Okay, now, by the way, I do recommend, if it's just a sole proprietorship, you have a separate checking account for the business. That'll make it much easier to pull your records together come tax time. Okay, because you won't have to go through your personal account and figure out, okay, what was a business expense, what was personal expense. You don't have to do any of that stuff. You just have a separate business account, and the business account can be in the name of your business. It'll be Kevin Bemmel, DBA, Bemmel Plumbing. Okay, and that will be the vesting on the checking account for the business. And perfectly acceptable. You know, different banks will have different ways that they'll, you know, want to do the paperwork, but even as a sole proprietorship, you can have a separate bank account, and that'll be very useful when it comes time to do your tax returns and prepare that Schedule C. And then whatever profit you make from the business, okay? So in a Schedule C, in a sole proprietorship, you may pay yourself a salary, but it's going to show up as net profit from the business, okay? Because it's still just you. So salary won't be deductible in the sense of reducing your net income. It's just that net income from the business then becomes part of the income you report on your own tax return. Okay. And that's how you end up paying taxes on your sole proprietorship business. Okay. So it's very, you know, very simple, very straightforward. If you're just getting started in business, it may be the way to go. That's, again, I'm not giving you any advice on what you should do, but this is a fast, easy way to get going in business. Okay. So that's a sole proprietorship. The next business entity I'm going to talk about is called a general partnership. Now, there are different kinds of partnerships, but the two I'm going to talk about are a general partnership and a limited partnership, or a GP, general partnership, limited partnership, an LP. Okay. So as you might guess, a general partnership has at least two members. If it only had one member, it's not a partnership. It's just one person, okay? But in a general partnership, you have at least two partners, okay? You can have more, but you have a minimum of two, okay? Now, like with a sole proprietorship, you do not have liability protection from the partnership itself, because as a general partner, you are personally liable for all of the acts and omissions, etc., that the partnership conducts. Okay, so if there's two general partners, you're both liable for whatever the partnership does. Okay, so a general partnership is sometimes called a pass-through entity, meaning the partnership itself is now a separate entity. It's a separate, what's called person. So you wait, the partnership is not alive, right? So there's two types of people under the law. There's a flesh and blood person like we are, and then there's something called a legal person. It's a person formed under the laws, in this case of a state. And a general partnership is a legal person. It stands as an entity apart from the partners themselves. Okay. However, that entity provides no liability protection for the general partners. Okay. Having said that, though, because the general partnership is a separate entity, it will have to prepare its own tax return. Okay. So let's say we have a partnership called Fantastic Plumbers General Partners, okay, or Fantastic Plumbers, and it's a general partnership. However we, you know, actually state it. Okay, so Fantastic Plumbers will file a tax return for itself. Okay, And that tax return will be separate from the tax returns for the partners. Let's say there's two partners. So the two partners have to each file their own tax return, but the general partnership will file its own tax return. However, it will not pay taxes. It will issue something called a Schedule K-1. And that Schedule K-1 will document the amount of taxable income that each of the partners received from the partnership in the year, in that particular tax year. Okay. And so, and then that K-1, it gets reported on the partner's individual tax returns. So again, the general partnership does not pay taxes. It passes through all of the profits to the partners, and then the partners pay taxes on their on the income that they got from the partnership. And again, that it's the same kind of thing. Salary is well, I mean, you can set it up so that you take salary from the general partnership, and then you pay taxes on your salary. You'll get a W-2 from the partnership, like you would from any other business. And then you may also get some profit. It depends. There's lots of ways that can be worked out, and that's something for you to talk about with your accountant. Okay. But in any event, the partnership itself is not going to pay income taxes. Okay. Now they may pay payroll taxes, by the way. It's a separate issue. I'm not talking about payroll taxes and unemployment insurance and all that kind of stuff. That's all completely separate. Okay. What I'm talking about is income taxes, and the general partnership will not pay income taxes. The partners will pay any taxes on income that they either took as salary or that they got as because there was a distribution of profits from the general partnership to the partners. Okay, so a general partnership, two or more partners, and it's a separate entity, a pass-through entity. Okay, it provides no liability protection. Okay, and as a result, you'll have a separate tax return that the general partnership has to prepare. Now, like with a sole proprietor, the general partnership can carry insurance to protect the partners. Okay, that all still holds, but the entity itself does not provide liability protection. Now, let's contrast that with a limited partnership. Okay, now you'll obviously you see it's a different name. And because it's a different name, it works in a different way in certain respects. So you see, in a limited partnership, still need two or more people, two or more partners in order to form a limited partnership. You cannot have a limited partnership with only one partner because that doesn't make sense, right? Partners are two or more. Now, in a limited partnership, there must be at least one general partner. And that general partner is liable for all the acts of the partnership. Okay? So just like general partners in a general partnership had no liability protection from the entity, general partners in a limited partnership also do not have liability protection from the limited partnership entity itself. Okay, a limited partnership must also have at least one limited partner. Now, that limited partner does have limited liability. And in general, a limited partner's liability will be limited to what they invest in the limited partnership. Okay, so let's talk about my plumbing business. We've been fantastic plumbers, right? And let's say I decide to form a limited partnership because I have a friend who wants to help me get going in business. Okay, so in that case, I'll be the general partner. Okay, and I receive no liability protection from Fantastic Plumbers, a limited partnership. Okay, and my friend, he'll be the limited partner. And let's say he gives me $50,000 in order to get the business up and running and going so that it's really generating income. Okay, so first of all, his liability is limited to the $50,000 he invested. So if let's say I do something wrong, in the plumbing of a house, and it causes, you know, $200,000 in damage, and the owners of the house sue me, the most the limited partner can lose is $50,000. Okay, now I'm talking, you know, it's a typical case. I'm sure you can come up with situations where someone was able to pierce the limited partnership and the limited partner got hit for greater liability. Some of those things happen sometimes, I'm sure, but in general, the limited partner in the example I gave, his liability would be limited to $50,000. Okay. Now, because his liability is limited, his participation in the business is also limited. So as the general partner, I run the business on a day-to-day basis. As a limited partner, he may not be involved in the day-to-day running of the business. And if he were, that could potentially take away his limited liability because he's acting like a general partner. Do you see that? Okay. So the limited partner can have certain limited say in what happens with the business. So for example, let's say we have a clause that says if we decide to terminate the business, okay, the limited partners get a say on whether the business can be terminated or not. Maybe they're, you know, it's a vote of a majority of the partners, limited and otherwise, or something like that. Okay. One of the things about a limited partnership is, I don't know if this is true for every single state, but I know it's true here in California, there has to be a written limited partnership agreement. And that's so that the limited partners know what are their rights, what are their responsibilities, and they know what they're getting themselves into. So what are the important aspects of the business on which they get a say? And they're going to be fairly limited. They're going to be typically major issues like whether the partnership is going to be what's called wrapped up, which means the business is terminated and the partnership is wrapped up and it ceases to exist. Okay, so you actually don't need to have a written agreement for a general partnership, although I suspect if you talk to your lawyer is going to tell you it's a very, very good idea, or your lawyer might say, no, you got to have one, but not here in California, for example, not by law. Okay, as a good business practice, you should probably have a written general partnership agreement. But with a limited partnership, by law, you must have a written agreement. Okay. Now, like the general partnership, the limited partnership is a pass-through entity, meaning it has to prepare its own tax return. And the partners will get K1s. Okay, each partner will get a K1. Okay, so the limited partnership does not pay any taxes itself. Okay, all the income of the partnership that is distributed to the partners is in the case of the general partners, maybe they're taking a salary, so they'll pay just regular taxes like they would on any salary they get. And then any profits that are passed through to the partners, well, let me rephrase that. Any profit that the limited partnership has at the end of the year will be taxable to the partners, actually, whether they are paid that money or not, because the limited partnership does not pay any income taxes. Okay, so the partners are going to pay income on whatever profit the limited partnership made. Okay, now they're probably going to get a distribution, so at least they can, cover their tax liability for the profit. And that, again, that's an issue to discuss with your accountants, to discuss with your partners if you're forming a limited partnership, how you're going to work all those kind of things. Those are all the details of forming this kind of entity. And there's no one way to do it. Okay, there are certain things you have to do according to the law, but there are lots of ways to make decisions about how to comply with the law. That's what your lawyer and your accountant are there for. Okay, all right, so that's a limited partnership. Again, 2 or more partners, at least one general partner who has no liability protection, at least one, I don't want to use that finger, at least one limited partner who has limited liability. Okay, it's a separate entity, a pass-through entity, and so it prepares its own tax return, and then the partners get their K-1s. Okay, so that was the third one, limited partnership. Oops, that went backwards. I don't know how it did that. That was weird. Okay, the fourth type of entity for your business is the limited liability company, otherwise known as an LLC. These have become very popular. They are a relatively new type of entity. I say relatively new. They have been around for, gosh, I don't know, 20 or 30 years maybe, but compared to partnerships and corporations, which have been around forever, it seems like, although not literally forever, but much longer than LLCs, it's a fairly new type of entity. So one of the things about an LLC is you have to file a registration of the LLC with the state in which it's being formed, okay? And with whom you file it'll differ from state to state. Here in California, you file it with the Secretary of State. For California, you can do it all online nowadays, and it's pretty simple. Excuse me, and it's fairly inexpensive to form, okay? It's less expensive generally than forming a corporation, for example, okay? Now, the thing about a limited liability company is, first of all, you only need to have one what's called member, okay? So you have members as opposed to partners. In a partnership, you have members in a limited liability company. So you need at least one member to create the LLC. One or more members, it doesn't matter how many they all have limited liability. That's one of the great benefits of a limited liability company. So unlike even a limited partnership where there's still a general partner who gets no liability protection from the entity, with a limited liability company, all the members get protection from liability. Generally speaking, the extent of their financial investment in the company. Now, having said that, if you recall, I think it's about 2-3 weeks ago, we talked about two of the easiest kind of businesses to start. And one of them was a business based on a professional license. So, for example, like a real estate agent or a financial services professional. So anytime you are a licensed professional, okay, and you form an entity, a corporation, an LLC, whatever, okay, you become the person supervising, or well, I shouldn't say you do. You may be considered the person supervising the professional conduct of that business. And if so, you will have personal liability, even though in this case you're the member of a limited liability company. So those are two separate things. Okay, so as a member of the limited liability company, you would be protected. You would be limited in your liability. You'd be somewhat protected, but as the person with the license that allows the limited liability company to pursue its business, you would have no liability protection. So then, depending on what you got sued for, that would determine whether you were held personally liable or not. If you were sued for some issue that has to do with the professional conduct of the business, so then you're not going to have a limited liability, because as the person with the license, you're on the hook. Okay, but let's say I don't know, you were driving somewhere and you got into an automobile accident. So again, I'm not giving legal advice, but perhaps in that case, that's not going to be considered a professional activity because you're just driving. Maybe you're driving to a meeting. that was unrelated to a client. Maybe you were driving to a meeting to meet with your insurance broker. Okay. So that's not a matter that relates to the professional conduct of the business. That's a matter that relates with the operation of the business itself. So in that case, potentially, okay, and again, you got to talk to your lawyer about this, but potentially you might have liability protection afforded by an LLC. So you can see it gets more complicated as we go on with these different entities, okay? And that's the reason why I wanted to do this show, so you can understand these various things. And as you think about what kind of entity you want to form, you're equipped to ask some questions to understand what you're really getting yourself into, okay? So again, with the limited liability company, the LLC, all the members have limited liability. Now, if you were forming an LLC for the purposes of, I don't know, running a bakery or owning a bakery, there's no professional license to be a baker, at least not that I'm aware of. I mean, you have to have health licenses and that kind of stuff, separate issue. Okay. So in that case, as the baker, you're going to have liability. You're going to have limited liability under the LLC as a member. And most likely, again, I'm sure we can come up with situations where, someone will try and find a way to pierce the limited liability, right? That's what lawyers are there for if they're suing a company, is to get where the money is, okay? Now, the limited liability company, like partnerships, are a separate entity. They're also a pass-through entity. And I see I have a typo here. I said partners get K1s. Again, they're not partners, they're members. Members will get a K1, just like partners in a partnership do, okay? And now, again, if you're employed by the LLC, and you might get it, and you're getting a salary, so you'll get a W-2 just like you would as any employee, even though in essence you're working for yourself, but you're still an employee, and so you'll be paid typically on a W-2. Okay, and then any profit that the LLC has at the end of the year, that will get reported on the K1, or the K1s that are distributed to the various members. Okay. And you can have managing members, and you can have, in essence, non-managing members of an LLC. That doesn't necessarily change the limited liability nature that the members have. Okay. But like with a limited partnership, or I'm sorry, like with a general partnership, although I don't believe you're required to have a written LLC agreement, it's a very, very good idea, especially if there's more than one member. So the rights and responsibilities of the members to themselves and to the business are spelled out, and everybody knows how things are going to work. Okay, so this is something to consult with your lawyer on. I know I'm saying that a lot. I want to keep emphasizing that these are not decisions you want to make on your own, especially if you're new to business. Okay, because people say, "Oh, I'm just going to form an LLC." Blah 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 blah. I said, "Well, why are you doing that?" That's what I've heard is the best thing to do. Well, it may be, but you ought to have someone who can advise you, look at your specific situation, okay, before you just go and do something. Okay, understand the ramifications of your decisions before you execute on those decisions. Okay, so limited liability company, fairly inexpensive to form, okay, but it does require registering with the state. Limited liability for the members, it's a separate entity, a pass-through entity, and so the members will get K1s to report the profit from the business. Okay, so that's the LLC. All right, now we're going to talk, the last two types of entities we're going to talk about are corporations. And there's basically, I'm going to talk about the two most common, which are S corporations and C corporations. Okay, there are other types. Look, all this stuff, there's lots of esoteric stuff. I don't want to get into that. It's too confusing. I'm sticking with just the real basics, so you can have a worthwhile overview and get a sense of what kind of issues are out there, what kind of questions you should ask, and that sort of thing. Okay, so an S corporation, like an LLC, like a partnership, it is a separate entity. It's a legal person. Okay, So it's apart from any of the people who work for it, any of the people who manage it, any of the shareholders. The corporation is its own person, just like the other entities, okay? It's what's called a pass-through entity as well, meaning that although the corporation will prepare its own tax return, okay, but it does not pay taxes itself. Any profit it makes is reported on K-1s to the shareholders, and the shareholders pay taxes on the profit from the corporation. Okay, so in this case, an S corp is fairly similar to an LLC. Now there are differences, and this is one of the reasons why you want to speak to your accountant and your lawyer. Is an LLC the right decision? Is an S corp the right decision? The way they appear to act, if you will, looks pretty similar, right? All the shareholders of the corporation, all the officers and directors have limited liability. Okay, that's the corporation provides that to them. Okay, however, how it does it, why it does it is different than an LLC. Okay, and so these are the kinds of things you want to discuss with your advisors before you make a decision. Okay, also the types of business in some states, the types of activities that different entities can be involved in may vary. Okay, so you may have in mind to do a particular type of business and think, well, I'm gonna do an S corp, and then you later you say, well, whoa, wait, I can't use an S corp to do that, or an S corp may not be the right type of entity for what I'm doing. So, if you're going to be investing in real estate, okay, and you want an entity that's going to own the property, okay, is an S corp the right thing to do that, or is an LLC better? Is a partnership better? Those are questions to ask your advisors so that you can make sure you're doing the right thing, especially with respect to the people who are investing with you or are involved in the business with you. Okay, these are not simple, straightforward questions necessarily. Now, for your advisors, they may be, because maybe they've answered the questions you're going to ask, 1,000 times before you. And so they know the responses to the issues off the top of their head. That's why you're paying them the money, because they have the knowledge and the experience, right? But for especially for new business owners, these are not decisions you want to take lightly. You want to investigate them. Okay, so with the S corporation, again, it's a pass-through entity. Okay, it limits everyone involved basically has limited liability. Now, by the way, if you have directors of your corporation, directors have a liability to owners, okay, because they're given the responsibility to direct the activity of the corporation. So they may have personal liability in that respect. So you may need to look into what's called D&O insurance, directors and officers insurance, okay, because also the officers of the corporation, they may have liability to the owners of the corporation, otherwise known as the shareholders. That's what a corporation essentially issues shares, and people who own those shares, they own the corporation. Now, the officers and directors may be shareholders too, okay, and they're probably not going to sue themselves, all right? But you might have shareholders who are neither officers nor directors, okay? And so in that case, if they don't think the business is being run correctly, they in consultation with their advisors may decide to sue the officers and directors, okay? And by the way, if you look in the news right now, you may see there's a guy by the name of Norman Peltz who has bought a lot of Disney stock, the Walt Disney Company stock. And one of the things he's looking to do is get a seat on the board of directors for himself or his son. And Disney is pushing back on him. They don't want him on the board. They're saying he's not qualified. I'm not opining on whether that is the case or is not the case. That's not why I brought up the example. The reason I bring up the example is Mr. Peltz is saying that the current members of the board did not thoroughly enough handle the question of who would succeed Robert Iger as CEO when Bob Chapek took over from him. I think now it's about a year and a half ago or so, around that. Okay, because Bob Chapek didn't last very long in the company, and Roger Iger came back and took over as interim CEO after Bob Chapek was fired. Okay, and Nelson Peltz is saying that, among other things, employees at Disney have been paid too much, and they bought I forget which business it was and overpaid for it, right? So potentially, I'm not saying this is what he's doing, but potentially he's building up a case that the officers and or directors have not protected the shareholders' interests properly, and so he may launch a lawsuit against them. Okay. Now, in a case like that, generally the corporation will pay to defend their officers and directors. Okay. But in the end, if the corporation loses, I don't know in the case of Disney, I don't think I own their stock anymore. But so I don't know if Disney has directors and officers insurance, D&O coverage. They might. If not, they may what's called self-insure, which means if they lose, the company pays for whatever damages they're liable for. Okay. But you can see how these things happen. Now, of course, Disney is one of the biggest companies in the world. But the same thing can happen on a smaller scale to a small business that is a corporation. And people think, oh, I'm just going to have my family's members involved, so I don't have to worry about such things, even among family members. Okay. When money is involved, sometimes family ties are not nearly as strong as we think they are. Okay. And sometimes the fact that they are family members and they're sort of, unresolved business, shall we say, between family members that then gets dragged into the business. Okay. And that's really the reason why, one family member is suing others who are directors or officers of a corporation. All that stuff gets thrown into the mix. So again, for the 50th time in this presentation, this is why it's important to get good advice, good accounting advice, good legal advice before you make the decisions on what kind of entity you're going to form. Because all of these questions, as many of these questions as possible should be addressed up front so that your advisors know what the issues are, can properly advise you. And then if something does go wrong, right, they know the context and can be well prepared to handle those matters for you in the way that will be most beneficial. Okay. So an S corporation, a pass-through entity, limited liability, and a separate tax return, shareholders get a K1. Okay, last entity we're going to talk about is a C corporation. So I've used this term before. A C corporation is a legal person. So is an S corp. So is a partnership. Okay, so is an LLC. Although C corporations were kind of the original legal. Well, I shouldn't say that. Partnerships have been around longer than C corporations. But when people think about legal persons, typically they're thinking about a corporation, because the corporation is an entity separate from anyone else who's involved in it. Any of the officers, any of the directors, any of the shareholders. Corporation is a separate person. Okay, so AT&T Corp is a separate person from all of the people involved with AT&T Corporation. Okay, like with the S corp, it has limited liability. Okay. Although, again, the officers and directors could potentially be liable for mishandling the business with respect to the shareholders who aren't officers and directors. And in fact, Disney Company is actually a C corp. It's not an S corp. It's a C corp. Okay. Now, like with all other legal people, a C corp has to prepare its own tax return. Here's the difference. The corporation will pay taxes on any taxable income that has not been distributed to the shareholders. Okay, what's sometimes called retained earnings. Okay. Now, there are ways corporations can sometimes shelter those earnings, but a C corporation is an income tax paying entity. Whether it does or does not pay taxes has to do with how it handles its business. Okay. But unlike a C corp, which passes through all of its, whose, I don't say they don't necessarily literally pay out all their profits to their shareholders, but their shareholders are responsible for all the profit that the C corp makes. I'm sorry, let me rephrase that. With an S corp, the shareholders are responsible for paying taxes on all the profit that the S corp makes. With a C corporation, okay, well, they're going to pay all their employees, and their employees are going to get W-2s, or if they have consultants, they'll pay them, they'll issue a 1099, whatever. That's all, income to those people. The profits that the corporation makes will either get distributed to the shareholders as dividends, and those shareholders will pay taxes only on the dividends that are distributed to them. They'll get what's called a 1099 div. Okay. Any profit that is not distributed, the C corporation itself pays taxes on. Okay. See how that differs from all the other entities. None of the other entities, partnerships, LLC, C corp, none of those entities pay income taxes themselves. Okay. The owners of those entities end up paying income tax on any profit they have. Okay. And of course, with a sole proprietor, the person is the entity. It's the same thing. So of course, they're paying their own taxes. Okay. With a C corporation, the corporation pays taxes on any undistributed profit. Okay. Now, that being the case, so that's why, by the way, you'll hear the phrase corporations are subject to double taxation. Okay, what they're talking about generally when they say that is a C corporation, because that's generally not true of an S corp. Okay, with a C corp though, so if a company retains earnings, they can pay income taxes on that. Okay, and then if they later distribute those earnings to the shareholders, maybe the following year, the shareholders are going to pay dividends on it as well. They're going to pay taxes on the dividends as well. So income profit to a corporation, C corporation, generally gets taxed twice. Okay, that's where that phrase comes from. Okay, and that's why you'll hear people talking about, well, dividends shouldn't be taxed because the corporation already paid taxes on them. Well, yes, that's true, but that's currently how the law works. Okay, and whether it'll always work that way or not, get out your crystal ball, I suppose. I don't know. All I can say is that's how it currently works. And again, this is why you want to get proper advice on the type of entity to start before you form one. Okay. Now, I will say that if you're going to form an S corp, initially you will form a C corporation, and then you will do what's called elect or choose S corporation status. Okay. So the way an S corp and a C corp initially are formed is the same, and then the S corp gets elected, and a C corp becomes an S corp, basically. Okay. Now, to the best of my knowledge, you cannot switch back. So once something is an S corp, that's it. It's an S corp, in perpetuity. Okay. So that's why you want to be careful. Do I want to make that election or not? That's something to talk to your advisors about before you make that decision. Okay. Now, you might also notice, as I've talked about the 6 different entities, the cost to maintain the entities basically goes up with each one. Okay. So generally speaking, it's more costly to maintain a C corp than it is an S corp, which is more costly to maintain than an LLC, which is more costly to maintain than a partnership, which is more costly to maintain than a sole proprietorship. However, the amount of liability protection you get generally gets higher as you go down. So as you go from sole proprietorship, partner, a little bit more protection, especially with a a limited partnership, LLC, more protection, corporation, more protection. Okay, so which entity is right for you? I can't tell you that. It's not my place to do that. What I can say is, whatever you start out with when you start your business, that doesn't mean that you're going to be that entity for all time. So when I started my real estate company back in the mid 80s, I started as a sole proprietorship, and I operated as a sole proprietorship for many years. And then talking to my lawyer one day, my business was getting more successful. And he just out of the blue asked me, he says, by the way, are you incorporated? I said, no, I operate as a sole proprietorship. This is before the days of LLCs, or maybe they were just starting at that time. But and he said, I would advise you to form a corporation, right? And we went through the different reasons why. That's where I learned some of this information. And in the end, I followed his advice. I talked to my accountant too. My accountant agreed, and so I followed their advice. That's why my advisors were there, to help protect me. Now, fortunately, I've never been sued. I'm glad about that, right? Knock on wood, as they say. But there are reasons other than limiting liability to form a corporation, or to form an entity, I should say. And some of those things have to do with if you, God forbid, were to die, a corporation is going to continue to exist. So the business won't die with you. Whereas if you're a sole proprietorship and you die, that's it. The business is dead too, right? So there's aspects like that to the entity that you choose that need to be considered as well. Other things are how people perceive the business. So to be a corporation, people are like, wow, that's a real business. Now you may say, well, that's kind of nonsense, but it is the way people look at things. LLC, oh, that's a real business, right? So these other factors may come into play, okay? And depending on what kind of business you're in, that may dictate what kind of entities are available for you to form. So if you're a doctor, there are certain types of entities that you can form because you're operating under a medical license. So that's a specialty. Need to talk to your advisors. Same is true of a lawyer and an accountant. Okay, so presumably as a lawyer and accountant, you know these things. But if that's not your area of the law, then I would encourage you to talk to someone whose area of the law is their specialty, to get their advice on what kind of entity you form. Okay, so it's an important decision, not one to be taken lightly. But then again, do keep in mind, you could start out as a sole proprietor and incorporate later, or form an LLC later. There's lots of ways to do that. Okay, but the main thing is, think about these issues, talk to your advisors before you make a decision. That's the key takeaway I hope you will get from this presentation. Okay, because everybody's circumstances are at least a little bit different. Okay, what your plans are for your business may differ from somebody else's. And so that being the case, you want to make sure that you're making the proper decision for you and your business and the other people who are going to be involved with it. Okay, so there we go. I'm going to stop the sharing. And the thing froze there for a minute. So that's our show for today. Business entities. Again, I'm going to just quickly review the 6 types of business entities we talked about: sole proprietorship, general partnership, limited partnership, LLC, C Corp, and S Corp and C Corp. Those were the 6 that we talked about. They all have their advantages and disadvantages, if you will. So as you think about starting your business, that's an important question to consider. There are, of course, lots of other things you'll have to deal with in starting a business. I mentioned a couple of them. A city business license may be something you have to be concerned with. If there's any kind of food involved, you may have to have health licenses, all kinds of things like that. But this issue of what entity are you going to operate your business as is a very, very fundamental question, and it's something to give considered thought to, get advice on, and then you can proceed confidently, knowing that you've made the best decision that you can. Okay, well, so we're actually I think a few minutes short of an hour. The show normally goes an hour, but we'll wrap things up a little bit early today. And if you have any questions about anything I talked about today, feel free to drop those questions into the chat, whether it's on social media, whether you're viewing it on our YouTube channel. If you are not a subscriber to the YouTube channel, I hope you will consider subscribing. We are looking to build up our subscriber base, and that way you will get notified each time a new show posts to our channel page. So it's the Way to Wow show on YouTube. And I do have some guests coming up, by the way. I've started booking guests for the 4th season here, so they'll be coming up in the near future. And if you have an interesting way of making a living, or you know someone who has an interesting way of making a living, contact me. My email address will be in the show notes, or contact me through social media. I'd love to hear about you or the person that you know, to see if they would be interested in being a guest, and what their story is first, and if they'd be interested in being a guest, because I think it's very instructive for us to see how other people achieved first of all, what their success is, how they define that, and how they achieved it. So I encourage you to let me know about that. And let's see, anything else? Oh, yes. Next week, I will be launching a second show, and it's going to be called, or it is called, The Way to Wow: Business Lessons from the Military. Okay, and what I'm going to do is take military doctrine and show you how to apply it to your business life. So one of the most famous books on military doctrine is Sun Tzu's The Art of War. Now, I'm not going to be talking about the art of war, at least not initially, but you will find a lot of business people have read that book, and they apply those principles to their business lives, even though Sun Tzu is basically talking about how you deal with combat and war. So obviously, war and business are not the same thing, although some people, I think, treat it that way. I do not. War, for the most part, is an existential human endeavor, dangerous, and should be considered as so, in my opinion. Business is not the same thing. While business is important, I would hope no one would ever, kill for their business. Having said that, many of the principles in military doctrine, strategic and tactical and operational, can be applied to improving how we manage and run our businesses, how we lead in our businesses. And so that's what we're going to be talking about each week. So I invite you to tune in on Tuesday, and you're going to want to know the time. And off the top of my head, I don't remember what the scheduled time is. So I will put the scheduled time for that in the show notes, and it will go out on social media, so that if you are following the Way to Wow show on LinkedIn, or you're following me on my Facebook page, Rabbi Kevin Bemmel is my Facebook page for the show, or on Twitter, there's the Way to Wow show Twitter feed. And there's also the Way to Wow show Instagram feed. So feel free to connect with any or all of those. Again, there's links in the show notes, so you can do so. And that way you'll know when each show is starting. The Way to Wow Business Lessons from the Military will be a half-hour format, so shorter than People Making Money. And so I hope you will tune in for that. I hope you will enjoy it. And that just leaves me to say, as I always do in ending each show, to my dear friend, Marie, who made many things in my life so much better. Marie, darling, Southern belle that you are still and ever will be my belle. So thank you very, very much for joining me, and look forward to seeing you next week.